And a pleasant good afternoon, each and every one, fellow cooperators from across the region, and welcome to another installment of Credit Unions and COVID-19, the response of our movement. We are very happy to have everyone here today with us, and Cipriani College of Labor and Cooperative Studies, the regional institution of teaching and learning and research. The cooperative and labor movement is really pleased to engage stakeholders of the regional credit union movements to begin discussion around the various coping mechanisms, both economic, social, and other interventions which credit unions have made and continue to make in this time of global pandemic. And today, our webinar is entitled The Regional Responses of the Regulators, the responses of the regional regulators. And today we are happy to be joined by Mr. Claudius Lestrade, who is the Director of the Financial Services Unit of the Ministry of Finance in Dominica. We also have Mr. David Moore, Cooperative Development Specialist of the Commissioner for Cooperative Development Office in Trinidad and Tobago. We also have Mr. Dennis Felix, the Executive Director of the Grenada Authority for the Regulation of Financial Institutions, the acronym GAFIN, and we have Mr. Nigel Studdard, the Acting Director of the Financial Intelligence Unit of Trinidad and Tobago, joining us here. So good afternoon, gentlemen.
Good afternoon.
Great. And we really want to get going into this discussion, as today we look at the perspective from the regulatory side. Credit unions are regulated. Under particular regulators, we now are faced with this situation, this COVID-19 pandemic, and we want to really engage in the discussion as far as the regulatory side goes. So, to begin the discussion this afternoon, I would like to introduce Mr. Claudius Lestrade of the Financial Services Unit in Dominica as well, and he's ably assisted by Mr. Patrick Carbon as they present their case as far as the responses of the regional regulators go. So I'm very happy to introduce Claudius and Patrick as they take it away. The floor is now yours, gentlemen.
Yes, good afternoon, Mr. Bartholomew and other presenters and the listening audience. Before we go into we have been asked to present on the credit unions and COVID-19 responses of the regulator. Before we go into the response by the regulator, we thought it would be prudent to set the context or set the stage for what we will be presenting. Credit union membership in Dominica is very large. In Dominica, we have a 99% penetration rate. As of the end of 2018, the credit union asset as a percentage of GDP was 66%. So credit unions, by all means, are significant financial institutions in the economic context of the country. As a result of the COVID-19 pandemic, we have lost 2,000 plus jobs in the tourism-related sector, that is direct employment, and a significant number indirectly employed in the tourism sector. So that's just to set the context for what we will be speaking about. Next slide, please. So it's important to, to discuss and to, when we speak of the impact, the regulators' response, it's important to speak of the impact on the members that this pandemic is having. And what we're seeing is, because we have so many persons laid off or others who have lost their jobs, what we have been seeing is reduced or zero earnings by some members, right? Some members are forced to live off their savings, and we have seen cases where savings are low, and that is even further offset by, by the health costs, right? And so that translates to the inability of the members to make payments in certain instances. In terms of the credit union, so in terms of the credit union, of this pandemic, and that is manifesting itself as the performance of the credit union. So in the areas of non-performing loans, right, where members, have either lost their jobs or have reduced working hours or reduced pay, we have seen the impact on the credit unions in terms of the non-performing loans. Because of that, we have, reduced loan interest income. And of course, with non-performing loans, there would, of course, be an increase in the loan loss provisioning. And all these actions translates to a reduction in the capital position. And it's something that we have been grappling with. It's not peculiar to Dominica. I think as the region, we have been grappling with the capital adequacy position of the credit unions as a whole. So because members have either lost their jobs or on work furloughs, reduced working hours, reduced income, we have, that translates into, the liquidity issues where withdrawals of savings, and overall a negative impact on the growth of the society. Whereas, we have asked credit unions to submit capital accumulation plans, and credit unions have been doing membership drives and trying to grow member share capital, permanent capital. There's been a halt on that effort. And so generally, generally what we have been seeing is a negative impact on growth. What we see and what we foresee for the second quarter of 2020. So what we have had to do is to exercise regulatory forbearance. And Mr. Lestrade will tell you a bit more about that.
Hello?
Yes, yeah, you know.
Okay, you hear me? Okay,
Fantastic.
thanks, Colin, and thanks, Mr. Carbon, for sharing some of the introductory and stuff we've done from the FSU. Well, as Mr. Carbon says, from a regulatory response, what we have done is, with the credit unions, is we've written to the credit unions and asked them to implement their COVID implementation plan. And in line with this COVID implementation plan is also the business continuity plan. You would be aware that disasters or pandemics or situations like that is not new to us in Dominica. And stemming out of Hurricane Maria and Erica, we have credit unions who already had this business continuity plan. And we wrote to the institutions, working closely with the Cooperative Societies League and Mr. Belfield, the manager of the league, and asked the credit unions through questionnaires to submit a COVID implementation plan. We've had the institutions submit those plans, and we've been reviewing these plans and made some recommendations and provided feedback where appropriate. Also, with respect to the response, we've had accommodation in terms of the changes to the credit union operating hours. So initially, when this COVID pandemic touched our jurisdiction, what we did was liaise closely with the legal umbrella body of the movement and had a collective approach where credit unions operated uniformly under one operating hours, although reduced, but there was a uniform approach across the movement, and we've had to work and provide the accommodation from a regulatory perspective. Allow the board to hold committee meetings virtually. We understood the situation, and we again worked with the movement to ensure that corporate governance was not neglected, and their meetings, both board and other committees, were held virtually and ensure that those were documented, although being held virtually. Extension for hostings of AGMs and filing of statutory reports for a period of 6 months was granted. So under section 42.2 of the Cooperative Societies Act, it provides for AGMs to be held no later than 4 months at the end of the financial year. And what we did was we received requests from the credit union movements, again, through the league and the movement itself, asking for extension in the AGMs. We understand there's a 6 months extension for hosting of these AGMs, however, which ends in October. But we are willing to exercise forbearance if COVID is to extend beyond that 6 months extension. Additionally, we understand that during pandemics, institutions systems can be vulnerable and be utilized for wrong purposes, and we've had to work closely with the compliance officers of the institutions to review the AML-CFT risk assessment and framework to ensure that the institutions are not utilized as vehicles during this pandemic for AML and CFT and other negative related purposes. Bearing in mind, we know that while the carter with the mice is played, therefore we ensure that criminals don't utilize these weaknesses within the institutions. So we again work closely with the compliance officers of the institutions. Additionally, we've had ongoing consultations with the Cooperative Societies League with the COVID-19 protocols that were implemented by the sector. As I said initially, the sector would have implemented certain protocols that their members would have to adhere to. And what we did was to assist in ensuring that those protocols were properly implemented and be reviewed continuously, because we understand that right now we have no active COVID cases. Therefore, those protocols would have to be changed, and we continue to work with the league and the movement to ensure that as those protocols are adjusted, that the movement adheres to those protocols. Discussions are also ongoing with the league as to the possibility of hosting virtual AGMs, though there is a 6 month extension, as I mentioned previously, but in the event that COVID would continue past the 6 months period, the possibility of hosting virtual ATMs, and the league has been spearheading a process where they're looking to host the AGM of the league virtually, and that will be used as a pilot project in the event that there is a need to host virtual AGMs of the other institutions. Discussions are ongoing, and the possibility has been thrown at the FSU an interim dividend. And while the legislation don't make provisions for an interim dividend, it may well mean that if and when or if that situation continues, the regulator would maybe have to issue a guideline or look at the possibilities or provisions in the legislation that provide for an interim dividend subject to regulatory approval. As I mentioned earlier, there is a continued focus on strategic focus on governance of the credit unions. We do not want the credit unions to lose their governance, as we know that situations like this can allow for weak governance. We can have nepotism. You could have other weaknesses, dominance of a few board members taking decisions, and we have placed strong emphasis and continue to give guidance that the governance structure of the institution should remain in place even through this pandemic. Mr. Carbon will speak to the next slides.
Yes, so just to say that as the regulator, we are guided by the international standards. And so, whereas, you know, the Basel Committee has implemented a 1-year delay in Basel III, in the implementation of Basel III. The IASB, more relevant and more pertinent to us, to the credit union movement, is that the IASB has extended the exemption for applying IFRS 9 to January 1st, 2023, whereas the implementation would have been from the financial year beginning January 2018. The ISB has extended that. So we are guided by the response as well of the international standard setting body. So Claudius, just continue on the staff.
Yeah, so just to continue with the staffing component, the measures we've had to take at the regulatory body with this COVID-19 issue would have is as follows: the restructuring of the staff working program at the unit. We understand the essential and critical importance of the credit union sector, and therefore work programs of officers will redefine to ensure that critical sectors like the credit union are given priority in our limited supervision during this crisis, bearing in mind that rotation of staff had to be taken to accommodate certain measures. We had limitations where staff had to work from home, and just to say that from the FSU, while COVID was at the doorstep, we maintained a presence at the unit all throughout this pandemic. The director was permanently reporting to the office, while the senior officers reported on a need arise basis, and the other non-essential officers reported from home. So we maintain that presence just to ensure that the sector, the credit union sector, and other important sectors that we serve will had a presence, regulatory presence. We continue to review and assess the COVID-19 potential impact on the credit union sector, and a stress test was done using various scenarios to assess the impact and the health of the financial stability of the credit union sector. What I can conclude, though, is that I'm bearing in mind what was being done, I must say, and coming from two critical disasters, the credit union sector in Dominica continue to weather the storm, and we have not seen any significant impact thus far on the movement. The movement continues to solidify itself and to remain a credit union force in the jurisdiction.
Okay, so in terms of further considerations, what we have been discussing at the FSU level, risk-weighted capital adequacy is not part of our legislation, but we conduct that exercise in-house, and what we have been saying is that we may need to change the risk weighting for certain assets when we consider that exercise. Additionally, we're looking at one or two or combination of these measures. So one of it is ring fencing loan losses as a result of the pandemic. What we foresee there to be problem loans strictly associated with the pandemic. And so what we're saying is that these loans should not form part of the delinquency portfolio of the credit union, because these are as a result of this peculiar scenario that we find ourselves in. So that is one option. The other option is in terms of I'll take the last point, in terms of the loan delinquency. A loan is delinquent when the first payment is missed, but we look at, from the regulator's standpoint, we look at delinquency as chronic delinquency, 90 days and over, 3 months and over delinquent. So in place of the ring fencing, we may consider a scenario where we do not consider, chronic delinquency until instead of 3 months, until delinquency has reached 5 months. So as I say, this is further consideration, discussions, decisions has not been taken on this as yet. As I alluded to earlier, there is some weaknesses in terms of meeting the capital requirements by the movement. And so what we foresee is some forbearance where that is concerned. In terms of loan refinancing, we have issued the guidelines in terms of caps on loan refinancing. But because of this pandemic scenario, we may have to review that position and probably, relax or review that. Relax or review that that guideline and that recommendation in light of the changes that we're seeing with the pandemic. Okay, thank you.
And thank you very much, gentlemen. I think the pace has been set in terms of the opening and those comments. I really appreciate you sharing the experience as a regulator and some of the issues that bear upon you in Dominica. So we really want to thank you for that. And we're moving swiftly along. Mr. David Moore, who is the Cooperative Development Specialist at the Cooperative Development Division of the Ministry of Labor and Small Enterprise Development in Trinidad and Tobago. And we invite Mr. Moore to just bring forward his presentation. And as he alluded in his analogy, Brian Lara normally comes one down. So in the batting order, you are up, Mr. Moore. And those of you who are joining us online, I want to continue to encourage you all to send your questions, your comments via the chat on YouTube. All right, so Mr. Moore, the floor is now yours, sir.
Thank you very much, Colin. Good afternoon to all the other presenters and to everyone who is joining us online. My name is David Moore, and I represent the Cooperative Development Division. We operate in Trinidad and Tobago under the Ministry of Labor and Small Enterprise Development. Our division is headed by the Commissioner for Cooperative Development, who is Ms. Andrea McKenna. She's acting commissioner at the moment. The authority of our division derives from the Cooperative Societies Act, Chapter 8103, which is legislation that was enacted in 1971. We are in the process of amending this legislation, but just the age of this legislation provides a number of challenges for us as regulators, and we'll get into that as we go along. Our staff, we have approximately 50 cooperative officers and 50 support staff comprising the entire division. And we are responsible not only for credit unions, but for all cooperative societies. So that also includes non-financial cooperatives, junior cooperatives, and secondary bodies. Just some general information. The sector as a whole accounts for 4.5% of the total financial sector in Trinidad and Tobago. We have approximately 600,000 member accounts, which represents, just by the numbers alone, approximately 45% of the adult population. But this 600,000 represent member accounts, so there may be some double counting, but just gives you a ballpark figure of our representation throughout the society. The two largest credit unions account for 26% of total assets of the credit union sector and 40% of member accounts. So that gives you an idea of the spread. The 5 largest credit unions account for 47% and 50% respectively of total assets and members. And then we have 13 credit unions where this asset size is above 300 million, and that represents 69% of total assets of the sector. And at the other end of the scale, we have approximately 55 credit unions with assets below TT 10 million, and they represent just about 1% of the sector. So I guess we can call them the other 1%. Okay, in terms of our response to COVID-19, we just focus on the operational responses. Of course, the response of the regulator is to facilitate the smooth operation of cooperative societies despite the restrictions. That would be the first thing that we would have to make sure of, because this COVID pandemic has placed on us so many restrictions, and the first thing is to ensure that we can operate despite the restrictions. In Trinidad and Tobago, credit unions were classified as essential businesses, and so therefore we had to be flexible and to move quickly in that ever-changing dynamic that is COVID-19. Financial resilience, of course, is an impossibility without flexibility of standards, so we have to look at how we apply those standards in the time of a pandemic, and we have to give clear regulatory approval for that flexibility. So it can't be a free-for-all. There must be some sort of a approval for that flexibility. Some of the things that were affected by the crisis, of course, would be the accounting standards. Everyone wants to know how we're going to deal with IFRS 9 in terms of capital and liquidity, IT requirements, and of course, governance. They have all been affected by the crisis. Just to place in context, as I spoke about the age of the legislation that we work with, capital and liquidity standards are not legislated for. However, they are reporting requirements, and therefore we monitor, but the Act gives us limited authority to make certain standards legal requirements. So those are some of the challenges that we face. So we seek to engage credit unions in discussion, but the Act limits us in terms of the actions that we can take. And as I mentioned, we are at the point of seeking to amend and update the legislation, and we are almost at the end of the consultation segment of that. Of course, the next step will be the drafting of the legislation, and then it's going to go to Parliament. Okay, so the main thing that we had to deal with from a statutory point of view in terms of what is legislated for would be the holding of AGMs, because our legislation requires that AGMs are held within a particular time, right? If those AGMs are not held within that particular time, in our case, we'll come up to it in a while in terms of what is the period. But it means that if you're going to postpone AGMs, it means that your budget for the current year is going to be affected because you won't be able to accept it. Distribution of a surplus from the previous year and the payment of dividends are going to be affected as well, because you won't be able to do that, because in our legislation it requires the approval of the AGM, the approval of the maximum liability of the societies in terms of the borrowing limits, the approval or variation of the quantum of honorarium recommended by the board can be approved. We cannot appoint an auditor for the present term, so that presents a challenge. And then we have elections of officers to the boards and to other statutory committees. So those are some of the things that have been affected by the inability to hold AGMs on time. The inability to hold AGMs on time have been affected by two things, really. One is that some societies have been unable to have their audits completed because of the restrictions of the pandemic. And we also have the fact that just the mere passing of time, and of course we cannot hold large gatherings, right? So that our requirement is that AGMs must be held within 3 months basically of the close of the financial year. Now you won't actually see that figure in the Act, but regulations 18.1 and 48.1 combined ensure that they have 1 month to prepare, 2 months to prepare the financials, and 1 month after presenting to the commissioner, the AGMs must be held. So the combination of those two regulations means that it's a 3-month period. So for those credit unions whose financial year ended in December, they should have held their AGM at the end of March. So we are now in May. So we've had to recommend that extension. That is still being considered by our PS and minister. And once approval is obtained for that, it means that the societies can continue to operate in accordance with the Act. So in the absence, again, of the holding of the AGMs, these are some of the recommended guidelines to societies. In terms of the acceptance of the budget, we advise them that in the interim, the board could make the necessary budgetary arrangements. We had to be flexible here in keeping with their statutory mandate to manage their societies under their bylaws. Because in any case, in that 3-month period when AGMs are statutorily allowed not to have an AGM in that 3-month period, in any case, the budget for the current year is not approved by the AGM as yet, and societies operate during that 3-month period on that budget. So it's just an extension of that understanding that boards can make the necessary arrangements, but we have to extend it for a period of time. So some amount of forbearance is given there. In terms of the payment of dividends and the allocation of a surplus, a number of societies would have approached us. The challenge, of course, to the economy is that quite a number of our members would have been laid off, would have had challenges in paying their mortgages and so on. And they would have challenges not only in paying their mortgages, but in purchasing the necessary items, whether it's food or otherwise. So that that was a challenge that some of the societies faced. And we had to try to be flexible on this. In these circumstances, the commissioner advised via circular early in April that we would consider for approval a recommendation from the board for an interim payment of up to 75% of the recommended dividend. But in order for us to consider that, societies would have to submit their audited financial statements and their completed annual returns. Similarly, for the honorarium, we had it at 50% in terms of the recommended honorarium that societies could request approval for, and the CCD would consider it. One other area that we got quite a number of requests would have been respect to virtual meetings. Of course, in 1971, that was not contemplated. So we had to advise societies that once we can have a quorum and establish a quorum, and that all the officers who are eligible to participate in the meeting would have access to a computer or an electronic device with a seamless online virtual meeting capability, then we would have no problem with them proceeding with the meetings. Of course, policies governing the operations of the meetings had to be established by the board, and then they would be ratified by the AGM in due course. And when we are doing our amendment to the Act, we would then institutionalize some of the best parts of these arrangements. In terms of the general meeting, so far no virtual AGMs have been held. The commissioner has received written notification of the intent to hold virtual AGMs from 2 societies so far. In terms of in writing, we are in discussions. Well, we are about to begin discussions regarding the logistics. We have written to one of the societies who requested our assistance. So those meetings will begin very shortly, if not, well, early next week. And the other society, we were just waiting to schedule the time. But it is important, of course, for the CCD, who is open to the idea, to be satisfied, of course, that all members who wish to attend can exercise their right to participate and to vote freely, and of course, to ensure that the integrity of the process is upheld. One other area that my time is coming to a close here now, my short 10-minute stint. One aspect of the operations in Trinidad and Tobago is that the government of Trinidad and Tobago signed an MOU with the Co-operative Credit Union League of Trinidad and Tobago through their advocacy and the Central Finance Facility, Cooperative Society Limited, where the government of Trinidad and Tobago will provide a facility of up to $120 million to increase the liquidity available to credit unions for loans to their members at a rate of 0.5% per month on the reducing balance. This arrangement, of course, is supported by the division, and it will attract the normal scrutiny and so on. However, because of the arrangement, credit unions will obtain from the government a certain amount of liquidity and be able to lend that on to their members at a much lower rate than exists at present, to soften the blow for those who would have lost jobs, whose businesses would be challenged, and so on. Right? We are part of an economic recovery plan post-COVID-19, and there are quite a number of aspects of it, but because of my time constraint, I will not go into some of them. However, the strategic focus for the division would be discussed at that, in that grouping, in that meeting, and the economic recovery plan would be rolled out to societies as it is developed. So I want to thank you very much, Colin. I think I made it. Maybe I took a minute or two extra, but I crave your indulgence, and I want to thank everyone for listening, and I'm available, of course, for questions.
Thank you very much, David. Well done. I mean, I think you put a good score on the board. You remain within. So, really thanks for that. And I think the discussion moving along nicely, and more we're hearing about this whole concept of virtual AGMs. And, I know a lot of the participants out there, very anxious to hear about the approaches concerning that. And on that note, we go to Mr. Dennis Felix, who is the Executive Director of the Grenada Authority for the Regulation of Financial Institutions, GAFIN. And at this time, I would like to invite Dennis to come to the front of the class and deliver in terms of his masterclass presentation on the response of the regional regulators for credit unions. So you may take it away, sir.
Okay, thank you very much, Colin. And let me say good afternoon to my colleague panelists and all the other online participants. And also to say that GAFIN is pleased to be invited to participate in this forum. The discussion would be from Grenada's point of view, and we would be looking at Grenada's response to the supervision of credit unions in the face of COVID-19. So my presentation would basically give, and we'll try to be as brief. We'll have a quick look at the status of the sector in Grenada. I'll give a reminder of the stated objectives as a regulator. Then we will discuss, we'll look at the adjustments that we have made to supervision, and that will be followed by a couple of points and as what we see as next steps, right? So with regards to the status of credit unions, of the credit union sector in Grenada, as at March 31st, 2020, this year, March 31st, we have a thriving credit union sector in Grenada, comprising of 10 credit unions and the league, with total assets in excess of $1 billion. So we have crossed $1 billion. The membership, 70,000 persons. I think we have a stable sector at this time, and I'm talking about up to March 31st, 2020. We have a stable sector, and there has been no significant impact or changes in the operations of credit unions as at March 31st. So the emphasis now is to look to see the impact in going forward. And of course, we do have a risk-based framework of supervision, and generally, as at March 31st, our credit unions were in good compliance based on the accepted prudential standards. Just a quick reminder on the supervisory objectives, because even as we deal with the challenges of the pandemic, we cannot lose sight of the supervisory objectives. So as regulator, we are responsible for contributing to the financial stability in the sub-region, especially the ECCU. We have the ECCB that has overall oversight for the financial stability in the financial system. We also seek to ensure safety and soundness of the sector. We try to maintain public confidence and ensuring protection of members' investments and safeguarding of certain statutory and democratic privileges. I think that is important, especially at this point in time. The good governance practices in credit unions, we expect those practices to continue. And those issues that has the potential to impact on membership participation, we also think that those should be maintained. And of course, $1 billion is a lot of money, so we need to ensure protection of the gains that have been realized in recent years. So this, in a nutshell, is the state of our sector and our supervisory practice objectives. By way of adjustments that we have made in response to the pandemic. And I'm discussing here primarily as it relates to institutions. I will not go into the micro aspect as to how the institutions relate to the members and run their business. We have suspended on-site inspections. So for this period, there will be no on-site inspections. We have also taken an initial or given an initial commitment of forbearance on certain statutory and prudential guidelines. Now, I say initial because as we deal with this pandemic, the situation is fluid, things are changing all the time, and we are quite prepared to adjust as we go. So with regards to the areas of forbearance that we are prepared to give, as it relates to completion of audited financial statements for the year ended 2019, we are prepared to exercise forbearance there, and I'll discuss that the details later on. Completion of annual general meetings as required by the Act, we are also prepared to exercise forbearance, and compliance with prudential ratios, capital, delinquency, liquidity. These are areas that we've identified for forbearance. But let me just say that as it relates to audits and general meetings, the Act, the Cooperative Societies Act, provides that there could be a maximum period of about 6 months for credit unions to hold the annual general meeting and AGMs. Now we know that in 2020, the months of April and May to some extent, and also March, we've had some limitations, some restrictions with regards to credit unions being able to carry on business and the auditors not being able to carry on the business and so on. So forbearance could very well go beyond the stipulated 6 months. So what are we focusing on presently? As regulators in this period, the emphasis now is on enhanced off-site monitoring and supervision. Therefore, emphasis on accurate and timely submission of financial reports from credit unions is very, very important, because since we have given up the on-site work, the off-site work, we think is very important. And so this is the area that we have intensified going forward. And let me just give a quick rundown on the specific contingency measures. So Colin, you could go to the next slide. With regards to annual general meetings, the meaning of annual general meetings will be guided by the protocols in place from the competent authorities on how we treat with mass gatherings at present. So during the period that Grenada was in lockdown, so to speak, a limited state of emergency, and we had a 24-hour curfew. During that period, there were a lot of services that could not have been carried out. Churches, for example, were closed. That is reopening right now. There's a new protocol now for churches to resume resume their business. And so, as I said, things are changing. So we are guided by the protocol in place for mass gatherings, and therefore I think it would be difficult at this time for credit unions to hold their general meetings. But there is an understanding or an expectation with the credit unions for speedy holding of annual general meetings on return to normalcy or as the protocol allows. So only this week, for example, there's a new protocol for churches to resume business, and we expect that could be extended for other gatherings. Also to say that once we return to normalcy, we expect all credit unions to hold their general meetings just on the basis of, or solely on the basis of, what I refer to as moral suasion. We do not expect any difficulties in that area. But just in case we have, or there in any environment where we have difficulties, I think the Cooperative Societies Act is adequately, have adequate provisions to ensure that annual general meetings are held. With regards to the completion of audited financial statements, all the credit unions, their financial year ends in December of 2019. So now that auditors are allowed to continue business, to continue their service, we have this unions to make suitable arrangements to complete the audits. I think during March and April, it was difficult for them to conduct audits because audits to be done. I think that situation have improved to ensure that they begin arrangements for timely audits. The funding of liquidity shortfalls. This is a critical, this has been identified as the most important area of concern for credit unions in our discussions with them. So we have put in place that the larger credit unions are urged to conduct cash flows at least on a quarterly basis. And if we confine ourselves to this quarter ending June, we've encouraged them to establish cash, establish lines of credit with the bankers. And for the smaller credit unions, the league has a central finance facility, and they can work with the league to support the liquidity. Exploring of engagement, and this is the challenging one here, and it's a bit far-fetched, but it's not impossible. We are prepared to, that is the sector here, are prepared to explore the engagement with the ECCB for possible liquidity funding of the systemically important financial institutions, that is those credit unions that are classified as systemic. And the discussion with the sector indicated that they are prepared to go through the CCCU to approach the ECCB for consideration for support financing with liquidity. Now, I say this is far-fetched because this is not the legal domain of the ECCB, but it's worth exploring. GAFIN has also undertaken to include this item as an agenda item for discussion in our meeting with the ECCB and other regulators scheduled for June 25th. And also through the league, the sector would approach our Minister of Finance, who is the Prime Minister, to lobby the Monetary Council within ECCB to see what consideration could be given in case this pandemic remains with us for a very long time, and we see squeeze on the liquidity situation in our credit unions. With regards to the financial indicators, I refer here to capital, delinquency, liquidity, and so on. It is our position that the minimum standards will remain in place. So we're not going to relax the standards. We don't want to make any changes to the standards for capital, liquidity, and delinquency. However, we are prepared to exercise forbearance. But we have asked all credit unions to be mindful that they should avoid insolvency at all costs. Regarding the application of accounting standards such as IFRS for NPL, for provisioning of NPLs and so on, this implementation of the IFRS for provisioning was introduced on the 2018 accounts. So during 2019, all credit unions had a standard in place for a model in place, sorry, for provisioning for NPLs. That would remain in place. What we are prepared to do is to exercise forbearance on meeting the standards, meeting the prudential standards, but with regards to the accounting standards, we think those should remain in place. With regards to reporting, we do have monthly reporting of balance sheets and income statements from all credit unions. And because we are concentrated now on enhanced off-site monitoring, we expect all credit unions to submit these reports in a timely manner, 30 days after the end of the month. We also have quarterly reporting forms. Those would remain in place, and we ask our credit unions to submit these quarterly reporting forms 30 days after the end of the quarter, and with emphasis on delinquency information. So even if you have difficulty in providing us some information on the quarterly forms, the one that relates to delinquency, we insist that we need those forms correctly. And this next point I think is important. We have identified, as I said earlier, liquidity to be one of the most critical areas of challenge for our credit unions. So in discussion with the sector credit unions, we have developed and introduced a new reporting form for liquidity. And with effect from the week ended Friday, May 1st, the 5 largest credit unions were submitting liquidity information to us on a weekly basis. So the credit unions close off business on the Friday, and on the following Wednesday, we receive liquidity reports on the new reporting form. This is to ensure that we can monitor very, very closely how liquidity is performing and respond in a very timely manner to address whatever challenges are likely to emerge. With regards to follow-up, there are some things that we still are working on. So we refer to it as follow-up and next steps. So for the quarter ending June, that is the present quarter, the sector is expected to cope quite well, particularly in the area of liquidity. And this might be considered to be a bold statement, but we have already, because we receive weekly reports from the credit unions on liquidity and monthly on the other areas, we have followed up with the credit unions to see how the cash flows were turning out and so on. And based on the feedback we receive from the credit unions, we do not expect any undue concern at least for the current quarter. However, ongoing for 2020, for the rest of the year, so as to identify liquidity shortfalls for timely responses. So the ongoing monitoring will continue so that we can respond in a timely manner with regards to any challenges that turn up. We recognizing the moratorium arrangement effected by credit unions, all credit unions together with the banking sector have given the government of Greenland to introduce or implement a moratorium arrangement where the members would get consideration for deferral of loan payments and so on. This, I think, is a significant item that we need to monitor, and so we have not yet developed a form, but we think it's important, and we are giving consideration for a suitable reporting form solely specifically for the for loans that have granted deferrals under the moratorium arrangement. And let me just say here that this part of the portfolio would be treated separately from the delinquent. And finally, And again, this is a matter that requires some discussions. Given the discussion we've had with the sector and the import, as a regulator, we have identified with the league and the sector that going forward, we need to prepare ourselves, or prepare the sector to deal with similar occurrences. Arrangement for liquidity funding going forward is very important. And now that we are in the process of finalizing our new cooperative societies regulations, that has taken some time, but we think that by end of June of this year, that will be finalized. One area we think that needs to be given consideration could be the placement of credit union reserves in a central facility, so that in case we face with similar occurrences going forward, we shouldn't have any difficulty in funding the challenges. So this is a nutshell the adjustments that we have made from a Grenada point of view. And Colin, let me thank you and all the listeners for the opportunity once again to participate and for listening to me.
Thank you very much, Dennis, for that insightful presentation. And you know, I saw a lot of paradoxes as you presented, and I know regulation is definitely something not easy. It's definitely something not exciting. However, it is something necessary. I heard you speak about the churches returning to business and credit unions returning to service. So I think that's that's a nice point to always note. And even in terms of the fluid situation, which is COVID-19, you spoke about insolvency issues as well. So I really appreciate in terms of the presentation, Mr. Dennis Felix. And you move quickly along to Mr. Nigel Stoddard, who is the acting director of the Financial Intelligence Unit of Trinidad and Tobago, and he will bring forward his presentation now in terms of the regulator's response from his perspective, particularly the AML CFT perspective. So I would like to welcome Nigel and just bring forward his presentation and encourage those of you who are joining us online to continue to like, share, and to pose your questions in the chat box. So we will have Mr. Stoddard, Nigel, in terms of his presentation.
Good afternoon to the moderator, Mr. Colin Bartholomew, and to all the participants online viewing this presentation, as well as my previous presenters. I would like to thank the Cipriani College of Labor and Cooperative Studies for this magnificent opportunity for allowing me to present to you all. My brief presentation is to introduce the impact of the COVID-19 on the operations of the regulator, AML CFT regulator, as well as the credit union sector. So moving along, the impact thus far on the regulator per se has been similar to what the other presenters would have indicated. We, as the AML regulator, would have had to temporarily suspend our on-site AML examinations due to the current situation, as we know. We are as well awaiting for the government position in terms of moving forward. We had to scale back as well our desk-based review, or which is considered off-site examination. We had to temporarily suspend our enforcement hearing. Again, that is a process where encourages gathering to deal with AML and CFT breaches. As well, we had to temporarily suspend our outreach sessions. We are currently working on online awareness sessions, and that should be starting hopefully at the end of this month into going forward into June and beyond as well. The online What we have encouraged as well is online reporting for AML obligation. We have indicated to all the different compliance officers to report their reporting obligation via emails to the FIU, and they can submit the hard copy. Later on, we have given that assurance that they can submit the hard copy later on, and there's no breach or penalty for doing so. Moving quickly along to the next slide. The impact that we have seen relative to the credit union sector in particular, as well as the different businesses in Trinidad and Tobago. We have seen the activation of business continuity plans in crisis situation. I don't think that this pandemic was one of anyone's continuity plan, at least I would imagine so, but we have seen that activated, and like the FIU, persons in credit unions, from my understanding, have been working remotely as well, and this as well would create some challenges, and we would get into that a little later on. We would have seen relative to the CDD, or the customer due diligence for new membership, this is a process that, regardless of what is transparent within the different jurisdictions, the business of opening new accounts, establishing new relationship would still need to continue. And based on COVID-19, there would have been some sort of adjustments have to be made. The FIU, together with the other supervisory authority in Trinidad and Tobago, that's the Central Bank and the Trinidad and Tobago Securities Exchange Commission, had published a joint statement dealing with the CDD requirements when establishing new relationship during this period. And that would entail, of course, online submission of IDs and other documents that would require the credit union sector to have those systems in place, as well as to verify those IDs using third-party information, whether it be in Trinidad, we have for the driver's permit, there is a online access where you can verify driver's permit, checks with the Registrar General departments and other third party to verify the identity of persons. Of course, in doing that, we request, or we would like to see that the credit unions having established account during this period, or using this type of method, that they do put certain restrictions in place. In other words, you would not want to automatically grant loans in large amounts or take deposits in large amounts. And this would be based on risk, of course, until the identity is verified. Digital ID is something that FATF recommendation 10 has been, when you look at FATF recommendation 10, we deal with customer due diligence, speaks to digital identification in doing transaction. And this, again, during this period is something that I think is more being utilized by both the credit union sector, the other business sectors, as well as the FIU. In terms of accepting identification, of course, in Trinidad and Tobago, legislation was passed relative to the driver's permit, even though driver's permit had been expired. That time frame had been given until August. So persons that opening accounts at this time would still can use their expired driver's permit to open as one of the IDs to open an account. In this time as well, we are looking that the credit unions, and they apply risk-based approach in terms of simplified due diligence and enhanced due diligence. And simplified due diligence would be based on members who more than likely may have been government employees, where verification is quite easy, and to do enhanced due diligence where the needs arise. Moving along to the next slide. What we have, some of the new challenges that credit union and not only credit union, but other businesses and financial institutions are going to experience, and in some instances are experiencing right now. And we have seen this based on suspicious activity reports coming to the FIU as well, where criminals are finding new ways to bypass customer due diligence because of the mere fact that credit union staff are working remotely. The use of emails and online platforms are more being used as opposed to in-house transactions. And of course, this give way for persons to send emails or SMS messages to fish for emails accounts, to send information to members as well, so to the credit union members, asking for verification of accounts, and to click and to put in the information in terms of their account number and names and other ID information. So this is something that is important, that credit union inform their members of these type of activities that is likely to take place as we use the online system even more at this time. Email hijacking is another thing in terms of or what we call having emails sent from someone else, from a member who may not already be the member because their email have been hijacked, and unless there's some sort of verification that the person did send to the credit union that information, the possibility of loss is high in that instance. We have ransomware attacks, email business compromise, and of course, in Trinidad and Tobago, as Mr. Moore had indicated, the government has given a stimulus package, so to speak, to credit unions, the credit union sector, to assist their members where they are seeing, where they may have lose their job or they may have been temporarily displaced, that they can grant loans. So that is something that in Trinidad in particular, the credit union sector would have to be aware of in terms of persons making attempts to exploit the system to, of course, obtain funding through the system. As we move along, moving into what the credit union can expect after COVID-19 in terms of what is known as this new normal. Like I said, there would be increased online operations in terms of digital and electronic, and that is something that we are seeing a lot of, and it would basically challenge other credit unions who may not be as large or sophisticated as the other credit unions to come to that platform so that they don't lose membership or hamper their business operation in any way. And of course, that is something that they should communicate with their regulator, as well as their leagues and so on, in terms of assisting them in this aspect. Cybersecurity, like I said, is something that is in the implementation would be important as well. And again, sophistication may require assistance from other league members or other credit unions in terms of assisting this aspect of it. We expect that there would be a greater use of the risk-based approach as opposed to a rules-based approach in terms of AML CFT. The only rules-based approach, generally speaking right now, would be in terms of the checking of the terrorist lists or the proliferation of financial sanction lists. Those are mandatory. And the other aspect of the risk-based approach would have to be used in terms of transactions being conducted at credit unions. And like I said before, the coordination and cooperation between regulators and credit union and your various leagues in your various jurisdiction would be important going forward as we navigate this new normal, so to speak. Moving along, I don't want to take more than my time. I know that person will have questions that they would want to ask of all the presenters. So moving along, in terms of resources, my last slide would indicate some website that you can access to get additional information for relative to anti-money laundering and terrorist financing in this new pandemic area. So I want to thank you very much for viewing, and I would turn it back over to our moderator, Mr. Bartholomew. Thank you very much.
Thank you very much, Nigel. You know, as I say, we have some occupational hazard, so it took a little while to just return to the forum, but we really appreciate it. And you know, it's really a good time because I think the questions have been coming in. We have over 15 territories represented in this forum, and the questions always, you know, very pertinent and, you know, it's a juicy topic and a juicy discussion. So, first of all, I would like to put a question to all the regulators of credit unions. So specifically to Mr. Lestrade, Mr. Mo, and to Mr. Felix, in terms of our annual general meetings becoming due, and in most cases overdue. So in terms of, you know, we looking at this panel, I would like first starting from Mr. Lestrade's perspective, you know, what is your view? All right, and then we'll go to Mr. Mo and we'll go to Mr. Felix. You know, what is your view in terms of holding virtual annual general meetings this year, particularly, you know, coming into compliance and fulfilling the fiduciary obligation of the credit union. So what is your view on holding virtual annual general meetings this year? Mr. Lestrade, I could begin with you.
Thanks, Colin. Well, from the FSU perspective, not a Mr. Lestrade perspective, from the FSU perspective, our view on the hosting of AGMs is stipulated. Virtual AGMs, although not stipulated in law, would have to be guided by the provisions in the legislation and any guideline that would have been or will be issued by the regulator. Because the legislation is clear on how an AGM should be held, a quorum of the members. So if there is going to be a virtual AGM, there must be some form of quorum to start with. Additionally, the additional notice of the members, this adequate notice of the meeting, members have to be properly informed of the hosting of that AGM, the time frame within that AGM will be held, as well as the information out there. How will that AGM be held? And as well as, you know, while there are virtual means to get some feedback from the members in regards to are they in conformity with their institution hosting a virtual AGM. So those for us at the FSU would be the critical areas, the quorum, the sufficient notice to members of hosting the AGM, and the medium through which this AGM would be held. So firstly, the quorum, having sufficient persons consent to hosting that AGM, notice of the AGM, and if those requirements are met from an FSU perspective, I would have no objection in allowing institutions to host a virtual AGM.
Great. And Mr. Mo, in terms of, I know you touched on it a bit in your presentation, in terms of the annual general meetings being held virtually, you know, if you could further expand on the FSU's position as expounded by Mr. Lestrade.
Okay, thank you, Colin. Yes,
Yes.
we recognize at the division that this is the way to go. We have been catapulted forward by this COVID pandemic, and we recognize that virtual and digital is going to be the new normal, as they say. So that we recognize that it is something that we cannot frustrate. It's something that has to go forward. As I said, only 2 societies so far have approached us, and we are willing to discuss. Of course, the role of the division in such a scenario where it's not contemplated in the Act would be to ensure that all the safeguards that are there for a live, in-person AGM are there for the virtual AGM. So we would want to discuss with the societies who would like to go forward in terms of what are the safeguards they're going to be putting in. Of course, the issues to quorum is critical. The issues to participation is very critical to us, because we won't want members to be disenfranchised inadvertently because of the lack of connectivity, the fact that they may not have a computer or a device that allows them to connect to the meeting. And we feel that those are not matters that we can gloss over easily. And of course, even to get more technical, we're going to have to get our IT persons involved to make sure that we understand the nature of the platform and that there's a certain amount of control, check and balance in whatever system that is being used. So just to summarize, we just want to ensure that members' rights are protected.
Yeah.
And we feel that we need to be engaged to ensure that, you know, these things are in place. So we encourage anyone who is thinking of holding the virtual AGM to get in contact with us and to enter the discussions. And as we go forward, it will become the norm. So then there won't be any need for any discussion or any and so on. Yeah. So we're looking forward to the interesting days ahead.
Nice. The new normal. Thank you very much, Dennis. In terms of your response, those virtual annual general meetings.
Colin, I think we have to be reasonable in this. Okay. So let me just try and put it in perspective. Okay. In the Grenada situation, all the credit unions financially ended at December 2019. So based on the provisions of the Act, they have a period up to end of June of this year to hold their meetings. During this 6-month period, we've had disruptions that prevented audits to be done timely and so on. Okay. So it seems to me that it would be obvious that credit unions would require a period of time out beyond June 30th to hold a meeting. So when we speak of forbearance, that is what we mean. We are prepared to extend forbearance in this area. We don't have the authority to say you could go beyond June 30th, but we are prepared to allow it in the circumstances. Okay. With regards to the virtual meetings, we are not ruling it out, but we know that to hold an effective general meeting, virtually would have its challenges, right? So what we have done, we've said to the sector, we do not want to compromise the sector in any way by not holding general meetings when it is feasible to do so. Mm-hmm. So we've asked them to discuss among themselves, under the umbrella of the league, suitable proposals for holding general meetings. and come back to us with the proposals for our consideration. All right. So we are waiting the feedback on that score. But be that as it may, we are prepared in going forward to be proactive as well. So once we think that in the Grenada environment, it becomes possible to hold meetings, be it virtually or otherwise, we would encourage the process to take place in a timely manner at that time.
All right, fantastic. And now this question is to you, Nigel. In terms of the number of risks, especially as you spoke to CDD, EDD, STD, as far as that goes, particularly looking at the scope, of the size of credit union, because we have from very large to very small. How are you really dealing with any type of breaches, hijacking, and the number of issues that you would deal with, especially now that we're pushing the envelope in this COVID time, where people are allowed to utilize expired IDs, as you touched on? How is the FIU really looking to treat with that? Particularly, and I mean, we speaking punitive, and otherwise.
Like Dennis said, there is some sort of forbearance, so to speak, but the forbearance would be in the sense of a case-by-case basis.
Yes.
This would be along the lines of the type of possible breach. Like I said, right now, credit unions have obligations to us in terms of the submission of what we call quarterly terrorist reports, which they submit quarterly, and of course the portal had ended recently, and as well as suspicious activity reporting. And in those instances, we understand the challenges that credit unions would have. Like I said, we offer that they send if they can scan the quarterly terrorist reports and submit it via email to our official email at FIU compliant, we would accept that and treat it as being received. And once that restriction time has passed, the hard copy can be submitted as well. Strangely enough, we still see that some credit unions, most credit unions, have still taken the opportunity to submit it via registered mail, which we are receiving, and that goes to the importance they place on their obligations, even in this time, which is commendable as well. Relative to the in terms of email attacks and phishing and so on, that would be within the remit of the fraud squad, but they can definitely report to us as well that type of activity. As an FIU, we do have some ability to reach throughout the world in terms of trying to access information once that may have occurred. And what we would be encouraging credit unions to do, their compliance officers in particular, and hopefully that the Commission of Cooperatives, as well as the league and even your institution, to encourage or inform entities of the risk involved in emails that they are unaware of, or verifying emails, because you can, instead of gov.tt, you might see gou.tt and not really look at it. Right? The FIU has published on its website, we have 2 COVID-19 fraud alerts, one for the business community, the general public as well. And that would give some indication which credit unions or anyone else can download, print, and email out to their membership, which would assist bringing some awareness to them, as well as assisting the credit union as well in protecting their members.
Nice.
So those are some of the things that we have implemented.
Nice. Thank you very much. Claudius, we have a question coming in for you, and it's concerning natural disaster. And I think, I think put it in perspective. The question is, in light of the upcoming busy hurricane season predicted for 2020, in addition to having to deal with the COVID-19, are there any additional protocols or changes that will be made for credit unions, reopening, reoperations? Has that been factored in at all? I think that's a concern, being echoed here as a question.
Thanks, Carlos. Well, as I mentioned in my initial presentation,
Nice.
Business continuity plans are part of the whole, what we expect credit unions to have as part of their policies and procedures.
Yeah.
While there are no specific measures that we have put in place or guidelines we have issued, Dominica is familiar with hurricanes and natural disasters.
Yes.
And stepping into the hurricane season, credit unions learning from the past experiences would be well positioned to implement those measures that they have implemented in the past and making the appropriate adjustments where necessary. However, COVID doesn't seem to be going anywhere anytime soon.
Correct.
So our emphasis right now is to continue to focus on the prudential aspect of the credit union, to work with the movement to ensure that there is not a rush to operate, that surplus is not the main objective, but protection of the members' resources, to ensure that the properties that these institutions own, the offices, the buildings, are protected. We learned from Hurricane Maria, where the loans that were granted, where policies were not properly renewed, to ensure that insurance premiums are paid on or before their due date, to ensure that the members' savings are protected, and so forth. So it's a whole looking back at what has happened and ensuring that those measures are relooked at and joined with their whole COVID implementation and plan, to ensure that they don't overlook the hurricane season, but that the measures that they're putting in place for COVID is in sync with the business continuity plan. And importantly, as I mentioned, is the whole protection of the loan portfolio, the reinsurance seizure of those portfolio, the insurance of the property, plant and equipment, as well as putting measures in place for the safety of their employees, staff by extension.
All right, fantastic. Thank you for that response. And I have a question here for Dennis, and it's concerning your hinting at establishing reserves and credit union reserves. And there is a request to expand a bit further on it, whether it will take place in a central facility, legislating for it and implementing it. So you have the opportunity now to get a bit more into that proposal and, just explain in terms of the reserves that you had mentioned in your presentation.
Okay, Colin, some years ago, when we had the Cooperatives Act, I think it was of 1996, probably the one before, had allowed for credit unions to make investments at the league, right? So the credit unions made investments at the league. And so those investments could have been used to assist credit unions when they need arise for cash and so on. That situation, I think, did not continue as intended over a period of time, right? And then we have a new act, well, a 2011 act, and the current provision is for the reserves that are held by credit unions. All you're required to do is to hold it in an account that is identifiable to the regulator, right? And of course, reserves is a fund, right? There's no requirement for it to be held in this particular way. So once you're not insolvent, the reserves are covered by your assets, right? So we have situations where liquidity is always challenging for some institutions. So we believe that if we have a well-managed central finance facility where credit unions contribute, and we are saying the contribution to that could come from the reserves. So what we are contemplating now, and what we are intending to discuss with the sector, is that the reserves that are just held in a fund and backed by assets, any form of assets, that these reserves could be held in a liquid form and managed in a central finance facility. Where that would be managed could be debated, could be discussed, and a position agreed on. Could be at the league, where the league could develop a strong financial arm, right, which it could manage separate from the normal league responsibilities, right? The league responsibilities of advocacy and so on, right? That's separate from managing a central finance fund. Or it could be with the regulator. I'm not recommending that it be the regulator, but that's the kind of discussion we want to have. The regulator currently, if we bring insurance into the picture, the regulator has under his control millions of dollars in value of assets from insurance companies. So managing assets of a financial nature is nothing new for regulator across the ECCU, right? So I think it's important, especially now, when we have identified the need for funding liquidity. If this pandemic continues for an extended period of time, we are going to get to a point where, especially larger credit unions, would be strapped for cash. Right? Would be strapped for cash to fund the day-to-day needs, the withdrawal, because primarily what is taking place now is withdrawals, right? When you bring the funding of loans and so on into the picture. So at this point in time, we need a facility to fund liquidity, and we don't know where there's no arrangement for that to take place at the moment. So it's something we have to address. I think across the especially the ECCU. I'm not sure. I think there are some territories that have well-developed systems, Trinidad probably, and Jamaica and so on. We need to take examples from these territories, how they've done it, and try and ensure that we set up well-managed central finance facilities. I'm just using this term, it could be by any other name, right? But ultimately what we want to do is that if faced with such situations going forward, the system do not have to rush to ECCB, for example. I have no legal jurisdiction over credit union to say, well, okay, we could bring you into the fold and allow you to have access to funds for liquidity. That does not legally exist at the moment. But we think that the system, the movement, is strong enough, given the amount of reserves among themselves collectively, to be able to set up its own fund going forward.
Right. Fantastic. Thank you very much. And well, we are into and over the 1:30 hour, but I would just like one more question to go out to the panel, especially as you know the questions are really coming in fast and furious, and people, it's really around the annual general meetings, virtual annual general meetings, and this in particular, the IFRS, in terms of those requirements. And David, I would just like to ask you, in terms of the IFRS 9, and in terms of the stipulations that have really been implemented, exercised, as a regulator, how have you been handling that especially now in a COVID period, you know, implementing it initially was a bit of a, you know, a jolt to the system. But now there's an additional jolt in terms of COVID-19. So as a regulator, how have you been fielding these sorts of this IFRS 9 measure? One, and then secondly, in terms of things such as the add-back, has there been any encounter with resistance or anything in terms of the capital add-back when it comes to the IFRS 9?
Okay,
So
Colin,
yeah.
Yes, Colin, thanks for the question.
Yeah.
In terms of the IFRS 9, you know, in retrospect, I know it was a touchy subject for a lot of credit unions, but in retrospect, anything that would have forced credit unions to re-examine the asset quality in the last 12 months and to put in place prudential steps to protect members' funds. In terms of what is happening now, it shows the wisdom of that approach, because at the end of the day, IFRS 9 is about protecting members' funds and injecting a lot of reality into the process. We have to engage in some discussions with ICAT, because clearly in these circumstances, there must be some forbearance. I think that is the word of the day.
Yes, it is.
I think that would be the new normal going forward. A certain amount of forbearance, and also a certain amount of flexibility in terms of the application of the standards. We in Trinidad and Tobago are in a slightly different position in that our legislation, let me repeat it again, has no legislative requirement for capital adequacy, and that is the issue with the capital add-back. The capital add-back is a facility to allow a certain amount of flexibility where there are stringent capital adequacy requirements in legislation. In Trinidad and Tobago, that is not legislated. So the capital add-back is really a moot point for us. But of course, it's a guide, and credit unions are, you know, can use it, because eventually that is what is going to come. You know, so that, but we, in terms of going forward, in terms of IFRS 9, well, 2019 is over, and some different credit unions are at different stages of compliance. But generally speaking, it has been a very high percentage of credit unions have complied and or made reasonable efforts and steps to comply. But 2019 financially is over, so that we still in the process of reviewing the financial reports, because we haven't gotten the majority of them yet, because this COVID thing has really stymied the process. So we're going to be examining the reports that we are getting. We have some annual returns, so we are looking at the annual returns as well to see if there's any improvement there. But going forward, we expect to engage ICAT and to have some meaningful discussion in terms of where they see it, because at the end of the day, this is their standard, and they are the enforcers of the standard. So it's going to be interesting times, and I think some of the cries for some sort of a flexibility will have to be heard now, because, you know, the situation is very, very different in 2020 from 2019.
Yes, excellent. And I mean, the questions keep coming, and we really want to thank the participants for liking, sharing, and asking these questions. So right now, you know, we take the opportunity to summarize the discussion. And, you know, I'd like to invite Claudius, first of all, you know, just to bring your closing remarks, your closing thoughts, and in terms of your contributions as far as the responses of the regional regulators, credit unions. Yes, Claudius.
Thanks, Colin. Just want to thank my colleague presenters for timely presentation. I think it was a useful exercise. We all going through this collectively with similar approaches in different jurisdictions, but the common objective is the same. The protection of the members' deposits remains priority for us. And while As my colleague from Gaffin said, while the church is open for business, the credit unions have to remain open for service. So that should remain a priority to us to protect the members, that we have obligation as regulators to ensure that they are protected and their savings are protected, which I think and believe that they will need as COVID continues to exercise its time itself on us. So again, thanks for the opportunity, and I wish yourselves and my colleagues all the best. Stay safe, guys.
Great, thank you very much. And I next like to ask Dennis just to bring your closing remarks and comments as we close off this session of the webinar.
Okay, thank you once again, Colin. And let me first of all thank you and the organizers for inviting us to participate. I think it was a very meaningful exercise. Within the region, we have a regional association of credit union regulators, right? CASROC.
Yes.
Right. So sometimes we get together annually when we could get somebody to fund the forum. We were not able to do so for 2020, but we hope we could continue that arrangement. Right. Yes. Good. Within the ECCU, we have another arrangement that is set up. We have a regulatory oversight committee where all 8 regulators and the ECCB participate in quarterly meetings and so on. So on June 25th, again, we'll be discussing similar measures to supervise the sector, not just the sector, but the entire financial system in the ECCU. I just want to say that from all what we have seen, it appears that this pandemic is not just a medical, not just associated with medical challenges. There are serious economic challenges associated with it, right? So with regards to the depth and the breadth and the level of uncertainties associated with the impact, I think would require those things are still evolving and would require a proactive approach on the part of all stakeholders so that we can respond as actively as we can to minimize effects, right, going forward. So I think it's important that we continue to work together, regulators, umbrella bodies, credit unions, other stakeholders, even central banks, right? We must work together to ensure that we can reduce minimize the effect of the pandemic as much as is possible. Thanks.
I think you may be on mute there, Colin.
Thank you very much, Nigel. I was inviting you to just bring your closing remarks as we close off this. Nigel started. Thank you.
It's not that I can read lips. I just noticed that she was on mute.
It's another skill.
I really want to thank, like I said, yourself, the Cipriani Labour College, and the others organizers of this webinar series. It really is timely, and it's really important for all credit unions and their members and regulators as well, other interested stakeholders. As well, I would like to thank my other presenters as well. I have definitely gathered a lot from the other regulators in terms of how they're handling the situation in the different jurisdictions, which is increasingly important, really. I would just want to say that definitely this COVID-19 has, or if it hasn't been realized as yet by everyone, I think it is illustratively clear that communication and coordination amongst all stakeholders would be critical in moving forward. There is no way that one stakeholder, regulator, or credit union, or anyone can move forward without the assistance and input of the others. So clearly, this webinar is a testimony of that aspect of it. Definitely, I hope that we see more of it. Well, finally, I would definitely want to again express our thanks in inviting the FIU in terms of an AML CFT regulator to the discussion, and encourage those participants via the YouTube to really communicate with your regulators and other stakeholders, because at the end of the day, it's what you are trying to protect. We all are trying to protect is the members, to safeguard their funds, to reduce whatever impact that they may have, and to make sure that they continue to grow in whatever wealth and investment that they are conducting safely. So that is the main aspect behind whether a prudential regulator in terms of Commission of Cooperatives or others, or even the AML CFT regulator. The whole idea is really to safeguard the economy, to safeguard the investment of the members, so that they can invest safely and securely, and of course grow each other jurisdictions as prosperous as we can. So thank you with those closing remarks.
Yes, thank you very much. And Mr. David Moore, David, in terms of your closing remarks.
Okay, Colin, I really want to thank Cipriani College of Labor and Cooperative Studies for inviting us here to share our views and our ideas with the sector. I really want to thank the other presenters and show my appreciation for the presenters from Dominica and Grenada. I think the information shared was really very enlightening for us. And it seems as though they seem to be a little ahead of us in terms of regulation, in terms of some of the strengths of their act. So we want to get like you guys, or maybe a little better. I also want to thank everyone who has been online. I'm seeing there are quite a lot of people. I know if we get even 10% of our 600,000 member account holders, we'll probably crash your platform, right, Colin? But I'm really seeing some bright things happening at Cipriani, and as Nigel said, we're looking forward to some other interesting topics that we can explore together. This is how we're going to be doing it. I'm not certain that anytime soon we'll be having too many seminars and in live meetings and so on. So this is how we're going to be meeting. So Colin, I really want to encourage you guys to do a lot more of this and to find ways to increase the participation and the viewership and so on. I continuing the analogy and just in closing, right? I know I don't know if it's a T20 or a test match, right? But I am guessing it's a T20 because I see some power hitters down toward the end here, right? I myself might be a tail ender, but it looked like so that and them fellas look like power hitters. So
power hitters, yeah, man. Middle order,
So, like Pollard and these guys. So I really want to thank you. This is the last of the series. Yes, Colin, of this.
Of phase one. This is the last of phase one. Yes.
Okay.
Yes. So
all right. So we're looking forward to phase two.
Definitely coming on board. All
right. So I really want to thank you, Colin, for the opportunity and to wish everyone a safe well, I can't say return to your home because most of us home, right? So the new normal is just stay safe and stay home.
Stay home, yes. Thank you very much.
Okay.
it's so instructive because one of our partners, the Caribbean Confederation of Credit Unions, WOCCU, they will be hosting a demonstration next week for regulators. So I think as we continue to partner, that would be something that could be very instructive. That, as regulators, we are involved in. And at this point, as we close off this phase, and this was really the broad-based discussions around credit unions and COVID-19, I really want to thank our partners, the Caribbean Confederation of Credit Unions, the WOCCU, and the Cooperative Credit Union League of Trinidad and Tobago, who have really, helped to extend this throughout and really make it a regional event. In addition to thanking the presenters today, I must thank Mr. Winston Fletcher, the president of the Caribbean Confederation of Credit Unions, and Ms. Denise Garfield, the general manager of the WOCCU. Your contribution here is really invaluable, and really thank you for making this a reality in this new normal period. It is so encouraging that at a time where we cannot connect physically, that we can actually do so, virtually. So, the connectivity is definitely here. And Mr. Joseph Remy, president of the Cooperative Credit Union League of Trinidad and Tobago, and Ms. Diane Joseph, chief operating officer of the of the Cooperative Credit Union League of Trinidad and Tobago. A lot of words and acronyms, but of the Trinidad and Tobago League, we really appreciate their input as we were able, over this 4-part series, amass over 780 registered participants from across the region, 15 territories, from Guyana, Suriname, Belize, Grenada, Anguilla, Antigua and Barbuda, Dominica, Jamaica, Barbados, Bahamas, St. Vincent and the Grenadines, St. Kitts, Cayman Islands, St. Lucia, and of course Trinidad and Tobago. And it's something very encouraging. And I have to thank all the other presenters as well, from the Jamaica Cooperative Credit Union League, from the Barbados Cooperative and Credit Union League, Ms. Martina Belize, from the St. Lucia Teachers Cooperative Credit Union, Mr. Sidney Newton from the Nevis Cooperative Credit Union, Ms. Janelle Benjamin, Eastern Credit Union, Dr. Winfred Jane Lambo Credit Union, and of course, all who have contributed, all the participants. We had an average of 200 participants online at any point in time. And education, I must say, at Cipriani, education continues to be one of our priorities. And it helps us to realize our cooperative philosophy of education, training, and information. And the irony of this entire situation is that while the world is now coming together to say we will get through this together, we have been doing this as a movement for time immemorial. So it's very encouraging. So I want to encourage you all to continue to like, share information. We will be engaging in further webinars as we get even more granular. We have now suggestions of, working out the logistics of virtual AGMs. And, that is an upcoming special webinar where we can have further discussions on that. So on behalf of the Cipriani College of Labor and Cooperative Studies, our director, Dr. Andrew Vinton Henry, and the Board of Governors, I want to thank you all presenters, thank you all participants, and wishing you a safe period as we continue to journey together as a movement. Thank you very much, and see you in the next installment of this webinar. Take care.
Thank you.
Okay.
Thank you.
Thank you, Colin.
Good job, Colin. Good job, Colin.
Thank you, Dennis.